put a couple $100 in the S&P 500 and you would have got 23% on your money in this last year. And the last 2 years, if you're calculating 23 and 24, it climbed 53%. It's one of the strongest 2-year performances since the late 1900s. Welcome to the Struggle and Strive podcast. My name is Estill Wallace. I am your host. You are joining us in our series on career and finances. If you're just joining us for the first time, please feel free to go to struggleandstrive.co, download your free study guide so you can study along with us. Don't worry, there's nothing there for you to buy. Today, we are going to be talking about the basics of investing. So we're not going to cover all things investment, believe me. We're only going to cover some real small stuff so that if you're a person who is curious about investing or your conscience is bothering you that you're not investing and you feel like you ought to be, this is probably for you. So let's get right into it. In the last episode, we talked about the different mindsets between having a job versus building a career. Let's examine why a career is favorable for investing. It's really obvious. Trading time for money, especially in an unskilled capacity like we talked about in the last episode, is not likely to generate enough revenue, enough money for you to quickly enough to cover all of your main bills and be able to purchase assets like stocks or crypto or businesses. So the faster you can start investing, the faster your wealth is going to grow. It's like so many things, it will compound over time as long as you start sooner than later. So I want to put that front and center, that starting, no matter how small, is more important than, building the right portfolio and all that stuff. I got to tell you, once you start, you will become more interested. You'll start to see more things as investment opportunities, and it will grow its own momentum, and it will take on a life of its own. But that'll never happen if you procrastinate and you put it off, and months and weeks turn into years. So no matter how small you start, I want you to start soon. Here's the cheat code for really simple low-level investing. You can open a brokerage account. I would suggest something like Vanguard or Robinhood, just so you can open a basic investment account. The next thing you're going to do is fund your account, deposit some money in there. No matter how small, you can deposit a few $100 so that you've got some money to start buying investments. You can do something simple like select an S&P 500 index fund. And that one, if you want, like some of the popular ones, some of the popular options are the SPY, the VOO, or the IVV. The purpose of this, if you're investing into a low-cost index fund on the S&P 500, it basically scales the entire index of the 500 most valuable companies in America. That list changes year over year based on who is the most profitable, who is the highest performing. Looks like we did 23% returns in 2024. So I've got some money in the S&P. A lot of people do. If you're looking at a lot of investment ideas, you're looking at different asset classes. This is what you call a paper asset. It's very simple. It's not super sophisticated. You don't have to get a Series 7 license. You don't need to go talk to a financial advisor. I'm not saying you shouldn't. I'm saying if you want the cheat code to start investing right now, you can take a few $100s and you can invest via Vanguard or Robinhood or Fidelity or any of these platforms, and you can put a couple $100 in the S&P 500 and you would have got 23% on your money in this last year. And the last 2 years, if you're calculating 23 and 24, it looks like it climbed 53%. It's one of the strongest 2-year performances since the late 1900s. So the S&P is actually doing quite well right now. You can place an order. Low-cost index funds are the ones you want to look for. You want to pay as little in fees as possible. And that simple step gets you in the game. Now, this is an appreciating asset, hopefully. It's appreciated quite a bit in the last 2 years. You're rarely going to lose money on the S&P 500. You can. It's not an impossibility. Again, I'm not a financial advisor. I'm not an attorney. I'm not telling you what you should or shouldn't do. But you can research everything I'm telling you yourself, and you'll come to a similar conclusion that is a very safe, relatively safe, and simple way. I think I hesitated and procrastinated investing for a long time because I was ignorant to how many aspects to investing there really are. I was under the impression that I had to amass a bunch of capital in order to be an investor. I had this vision in my mind, like, all right, I'm gonna spend the first half of my career making a bunch of money, and then I'm gonna spend the second half of my career just completely as an investor. Maybe some people do that. As I've gotten older and I've continued to work and I've continued to grow my businesses, and I've realized that I've been investing for quite a few years now, and in multiple classes between real estate and different cryptocurrencies and different stock holdings. And in other businesses, I've invested in quite a few things, and I've gotten a pretty good return on most of what I've invested in. I'm not some kind of investing genius. I'm a guy that built himself from nothing to a pretty strong place, and I want to share with you some of the simple to use cheat codes and life hacks that I picked up in reading so that you can try them too if you want to. So what I want to leave you with is you can start now with even $100, and over time you can try diversifying. And Robert Kiyosaki in his investing book makes a joke about a diversified portfolio is not a portfolio of a bunch of different stocks. That's only one asset class. So when I say diversify into your investments, my suggestion is to look at and research various asset classes, everything from, like we just described, index funds to cryptocurrency to different types of individual stock. Nvidia has shot through the frickin' roof over the last few years. Real estate, starting your own business, buying your own business. There's a lot of different ways that you can invest. If you are an accredited investor, you'll have opportunities that others don't, and that would be to get in on pre-IPO stock. This is highly volatile area for investing. I do some of it. I'm not suggesting that you should do some of it. I'm just explaining some of the different asset classes and options that are out there. And if you're an accredited investor, you do have more options available to you. That being said, I'll just close with a line from Robert Kiyosaki, The Philosophy of the Rich and the Poor is this: the rich invest their money and spend what is left. The poor spend their money and invest what is left. That's it for today. I will see you on the next episode.